Okay, guys, thank you. Have a lovely week, but stick with us because Andre, which is our harmonic specialist and has one of the most beautiful charts you've seen, will take you for a tour in whatever you want to know. First of all, of course, Andre, you can go ahead and speak to us about what you have highest conviction in at the moment, and then I'm sure you'll be happy to answer questions for our friends here. Let me pass the screen to you.
Thank you.
There you go.
Okay, show my screen. Let me try to.
If you have multiple screens, you can choose which one.
No, I want just screen monitor. Okay, it will show you. Can you validate my screen, Steve?
Yeah, we can see you.
Okay, the chart, yes.
DXY, we're seeing a DXY. Yeah.
Okay. So I welcome you all. For those who are not inside this amazing project, I invite you to join us. The confluence between our technical analysis is tremendous, and I believe it can help a lot of people. So especially for those who are not feeling so comfortable inside the markets, somehow you can find some comfort inside. So some of you already know my work inside other socials, as TradingView and other platforms. I only search for advanced pattern formation. So I started 8 years ago, learning the markets, and I became, I don't want to use the term an expert, but well, I feel very comfortable searching for advanced pattern formations and other basic patterns inside the market, and that allows me to identify, above all, identify targets for those patterns, for those behaviors, and based on those patterns, I also can, I can adjust my limits and my risk for my position. So that said, the advantage trading harmonic patterns, in my point of view, is only that allows me to detect and to identify potential targets, and based on those targets allows me to set my risk limits. So just as an example, if you trade, let's say, 1% of your capital, and if you have a one-to-one risk reward situation to trade, you know that you just lose 1% of your capital on those trades. Obviously, we need to try to maximize our profits and minimize our losses, because there are a few issues people eventually tend to commit when trading advanced patterns, because and it's related to targets, especially to targets, because people don't trust on those targets. And I traded those harmonics since I started to trade and to learn the markets, and I forced my brain to believe on those targets. So based on that, I repeat those process 100% of my trades. I respect the structures, and I respect previous structure highs and lows in order to set my limits, but always in consideration with my targets. So I will give you an example here. Not just harmonic trading. I like to engage other patterns. This is a daily time frame on Dixie. Let me jump into a 12-hour chart. I like 12-hour charts, not for any particular reason, but I like to divide between, let's say, between a daily chart and a lower time frame chart. I found interesting those 12-hour charts. So at this point, and let me push this previous idea, and I'm pushing this idea because I think it's relevant. It will be, or it should be relevant for the next 2 weeks. So at this moment, this is a chart from November 24 last year. So at this point, I was expecting the formation, and based on the price action we have here, I was expecting the reinforcement of the previous support, previous resistance zone also. So I was just expecting one eventual neck formation, then the pullback to forming the right shoulder, and then the breakout. So there are a few ways to trade those setups. The one that I prefer, and specifically based on this price action, because this is a super bearish trend on dollar index. So at this point, one of the opportunities the market should offer us is a pullback to the 61.8. So the right shoulder formation, and I like to define a specific criteria for those head and shoulder formations. So I like horizontal necks, so I don't like a very extended necks, like the diagonal or higher degree diagonal neck zone. So I prefer, let's say, an horizontal neck. In terms of visual approach, it will be easier for me to detect them and to trade them later. So at this point, I was expecting the reinforcement of this neck zone and later the formation of the right shoulder. And there's one specific criteria that I've defined for myself. So I need the highs of the right shoulder to close below the highs of the left shoulder. So I need the right shoulder formation, and if synced with the 61.8, it's even perfect. So I need the market to print the right shoulder and then the fall. So I can trade. There are a lot of ways to trade those patterns. Obviously, one of them is an engagement at 61.8, expecting the market to trend continuation lower. A second and alternative way is to wait for the breakout of the neck, or a retracement trader that waits for the retracement to retest the neck zone. So as we can see here, the market has actually printed exactly what I was expecting. It will not happen every time, obviously, but I believe it's an interesting chart, not only to show you the way I trade, because I only trade patterns and I try to take advantage of those behaviors because they repeat over history, so it's not difficult to find them. And above all, it allows us to detect or to identify invalidation points. I know if they put the price above, that will invalidate the potential bearish trend continuation, or at least they will put a deeper pullback or a deeper retracement, since this is a pullback, so it's a retracement move. So why this is relevant for me? Because of this. So this is the broken neck, the previous broken neck zone. So in the market has decided to retest that neck zone, or that previous support, now resistance, and those structures you are already used to check inside the ForexAnalytix team, because they are mastering those patterns, those triangles and flags, and those structures inside those trends or those bullish or bearish momentums. They are specialized and mastering those patterns. So above, or actually below, and I believe this is common sense. This is a double bottom, and people, this is my opinion, obviously, but I believe people tend to ignore the power of those patterns. So especially if you are dealing with those patterns on an higher time frame, like a daily time frame, you can see this as a double bottom, and not a technical double bottom, and it can change. It will depend on your provider also, because different providers eventually will print you a technical and perfect double bottom.
Hi, Andre. Andre, it's
sorry, Dale. Yes.
Welcome.
Welcome. Thank you very much, Dale. Thank you. Welcome. If you need to interrupt me, please feel free.
No, I just I'd like to know, since it's a Friday and we're headed towards month's end, what are you looking forward to? What are your going into next week? Do you have any ideas that our community could focus on?
That's exactly where I meant to reach, Dale. So let me just.
Sure.
It's based on this behavior, okay? Because so this is our double bottom formation, and actually we have a broken neck, validating the double bottom. Okay, so we have a resistance printed. We have a resistance above the neck zone, and we only need to wait for the 61.8 retracement in order to validate a trade setup. So this is a 2618. The 2618 is nothing more than a double bottom or a double top followed by a 61.8 retracement. So obviously at this point, at these levels, we should wait and eventually go into a lower time frame and check market conditions, and eventually wait for a candlestick pattern formation or any other pattern in a lower time frame for a decent engagement. But again, it's a trade setup based on a reversal pattern, and it's a very powerful reversal pattern, a double bottom or a double top, followed by a retracement at 61.8. So obviously the golden ratio, and the resistance obviously must be printed above the neck in order to validate this shape as a double bottom. So what I'm expecting for the next week, and expecting not to reach this level today, it can happen. Obviously, this is a daily time frame. I will change again into a 12 hours. But at this point on Dixie, I will expect the 61.8 pullback in terms of patterns behavior. I will expect a 61.8, and I will see what the market will offer me there. Below there are other harmonic patterns before the market eventually break these previous structural lows. If the market will respect them or not, I never know, but the patterns in terms of ratios, this is what we will have eventually at 88% retracement. Let me just say, obviously, we didn't, the market did not retrace to the 61.8 at this point, so I can validate based on these recent shapes and this recent behavior. I can wait for the next eventual bullish pattern before breaking these lows. So obviously, at this point, we trade based on the fib retracement level. So we trade the fibs. We trade by default 38% retracement. So at this point, I'm not expecting a huge reversal, okay? But I trade based on that price action. So if the price action offers me a low and a high, I will trade the retracement. I expect, we can expect a retest to the previous structure support zone if the market prints the bat pattern in order to keep above these previous structure lows. So I'm expecting dollar. Obviously, this is a super bearish mega trend. So, but in terms of advanced pattern formations and based on those time frames, this is what I can expect. Obviously, a 61.8 pullback can project an ABCD pattern above, and I can show you that example on XPX 500. I published that chart today for the ForexAnalytix community. It's exactly the same thing as on dollar, a little bit different, obviously, but this is a double bottom broken. I was expecting this as a primary resistance level, but they pushed the price above, as Blake has mentioned. They were expecting the market to reach those levels close to the 78% retracement, deeper pullback, but a resistance. So we can validate that as a most recent resistance. Now we are breaking this bullish momentum, and now the price has found some support at 61.8. So double top, double bottom, broken neck, resistance above the neck, pull back to the 61.8 by default. Just taking in consideration this specific pattern, usually we can project this as a symmetrical ABCD pattern that will put the price at a new highs. But obviously there are other ways to trade those setups. One of them is using Fibonacci levels from this previous swing low, or using the structure, or eventually media average if for those who are trading based on those media. So just a few, or a fast approach, how we should be disciplined in searching for those behaviors. So I try to take advantage just based on those patterns and nothing more. Obviously the market can fail, and if the market fails to print me to engage in the bullish momentum from here below at 88% retracement, it's also a retracement reversal zone between the 78 and 88% retracement, both levels for different harmonic patterns. The 78% retracement is used for the Gartley pattern. The 88% retracement is used for the bat pattern. There's also some confluence between the Gartley and the 78% retracement, the 127 extension. So there are different ratios, different patterns, eventually similar price zones, and below one of the patterns that I eventually like most, the shark pattern, because usually it's easy to identify. It's composed with 3 corrective waves structure followed by an impulse wave. And that's what can happen here. So it's a pattern that extends to the 161.8 from this very last swing, the swing that creates the most recent resistance. It's an extension between the 161 and 224. So those are the levels for the shark pattern to be printed after a 3 waves corrective structure. So Dale, I don't know if you want to interrupt me somehow, or Steve or Stelios, I'm not sure. Yes.
I think we're just all mesmerized by your voice.
I like.
Andre, by the way, welcome to the team, and as everybody here should probably know, obviously I have great admiration for your work. You know, harmonic patterns are not the easiest of patterns to recognize. They're a little bit more. They're in my opinion, it takes a little bit more of a careful eye to see them. What's the easiest way for you to identify a harmonic pattern as it's developing? What's from like a naked eye standpoint?
Well, I believe Steve has mentioned previously on a recent webinar. There are basic concepts on trading that people need to understand first before trying to trade harmonic patterns. What is an impulse wave? What is a corrective structure? No, because most of those patterns are forged after impulse waves. So the example, the crab patterns and the shark patterns usually are patterns printed with an impulse. So they finish with the impulse wave. So we trade the corrective momentum. So the bat patterns and the Gartley patterns as reversal patterns on trends usually are printed inside a corrective structure. Then we engage into an eventual impulse wave. So there are basic concepts that people need to understand first: structure, price action, and eventually candlestick formations. As an expert, I believe you are in better conditions to talk about that. But I believe time is your best friend on trading. You know, when crossing your learning, actually when you inside your learning curve or your learning journey, I believe time it's crucial. If you don't have time to learn the markets, you will never be able to trade any strategy. So trading harmonic patterns it's very similar as trading candlestick formations or any other pattern. It will depend how you master the Fibonacci tools actually. And I believe we use Fibonacci tools inside different technical analysis. For those who are already familiar with the Fibonacci tools, searching for those ratios and for those retracement and extension levels, I believe it's nothing more. And actually, we have confluence between the basic technical analysis. Sometimes we have confluence between one harmonic pattern. When you search for one last extension, this is the chart from bonds. I published that weekly. I believe it's a weekly chart for ForexAnalytix also. And this is the butterfly pattern, the orange pattern. This is a butterfly at 127, and look how the market has reacted once it crosses that level. So it has rejected to close the 127. It has created a very nice momentum here. We never know if the market will achieve those targets at 38% retracement by default. the butterfly will offer those trades. But searching for those ratios are not the difficult part of the process. Like, I believe you understand that the difficult part is to trade them, and is to adjust our position size for those trades in order to not cross our limits. Is to identify targets and to respect them. And because if I engage the market here, assuming a one-to-one risk reward, and this is just an example, and to be fast, I don't want to put people at sleep at this moment. But if you assume that if you engage the market with a one-to-one risk reward, and if you repeat this process over the next 400 trades, so I will search for daily or weekly, let's say, or a 4 hours time frame, butterfly patterns. I will engage the market with all the times with a one-to-one risk reward situation, and I will set a 1% of my capital at risk. If you repeat this process over the next 400 trades, I believe it can be tricky because it's a one-to-one risk reward. Eventually, you will become you can turn into a break-even trader. But let's imagine you can obviously minimize our losses, obviously. But let's assume this as default. If you re-engage the market for the next 400 trades, and if you get out from half of your positions before your targets, you will see the market reaching your targets, leaving money inside the market. The market will reach targets, but when the market rejects that trading idea, so if the market pulls back against you, you will not close your position too earlier. You will leave the position until the position until the stop hits. So you will not abandon your position once the market starts to trade against you eventually. Just a very strong mind will do that. Okay, it's not common to see people, okay, the market will react against me, I will jump out from the market. And I learned a very, very strong lesson recently when I tried to, okay, let me try to position manage my position. I see the price going against me. Eventually I will jump out from this position. I will see situations where the market has respected my stop loss by 5 pips and then later resume in my direction. So I learned a very strong lesson. Keep your stops and leave your position. Engage your position if you have a decent situation to trade or a decent setup to trade. Prove it. You need to prove yourself that the trade is valid for you. Just leave your trades and believe your targets. I use then. Sorry, Blake.
No, please go ahead.
So I just use then, and this is my salvation. I want to share with people what has granted to me the possibility to be here tomorrow and the next day from tomorrow. So it's the position management also. I always believe my targets. I close half of my position at 38% retracement. I break even my position at those levels. On an higher time frame, I can adjust my position, my stop loss a few points above my entry, and I just follow my position. Then later, if the market achieves my second target, I keep adjusting my stop loss and I activate a dynamic trailing stop. As an example, just to finish, I want to jump into Aussie versus yen. Oh, actually, let me jump into that trade that you shared, Blake, because I think it's very interesting. That's Aussie CAD.
Oh yeah, the Aussie CAD.
That you shared a few days ago, last week, I believe. And this is another harmonic pattern printed here. So it's an extension from this swing here. So from this very last swing above. So at this point, I will search something between the 161 and the 224, and I have previous structure above in order to put here or set a retracement here. So I can use a retracement confluence zone, and inside or between those ranges, I can search for an opportunities to sell the market. At the point that you mentioned, you called the attention from this chart. I look into a chart. Okay, this is the one very, very interesting situation to trade. I'm holding this trade, and let me use this retracement here. And there's a particular subject that I need to mention here, because I heard a few webinars ago, and there's a difference. And with all honesty and with my being humble and with all the respect for all your approaches. There's a difference between greed and technical approach. Okay, and why I say this because I listen to Dale when I engage a position like this. It's actually based on a technical approach only. So I have my first target at 38% retracement. I break even my position and I wait for the market to achieve the 61. From here, I will trade. I will set a dynamic or a trailing stop on those positions. If I go into Aussie versus yen, I'm out from this position. I sell the market there. I sold the market here. At this point, at this point, this is a 2 days chart, I'm sorry. I sold the market there at this very top. And I hold this entire position until here. So the market has decided to put a deeper pullback, and I jump out from the market with my dynamic stop being reached. So I didn't move my
got stopped out for a profit.
Yeah, for profit, obviously. So I trail my position from the second target at 61% retracement from all these swings. So this is the second target for the pattern that I was trading at that moment. And from here, I adjusted my stop losses below this previous support zone. And from here, I started to trail the position. So somewhere between somewhere in between this bullish momentum, I'm out from this market. But it's pure technical approach. Okay, it's nothing related to being greed or not. And obviously, there's a big difference. If I'm Dale, if I'm trading with a 6 digits trading account, obviously it can change. But I need to maximize my profits, and I found a way to maximize them. And I make use of that. I take advantage of it. It's actually the only way that I survive it inside the market, trading those harmonics, is using a dynamic stop, because it will maximize my profits. Obviously, I need to give back. I need to deliver to the market a few points, but I don't even care about that. So I have 2 primary targets, and everything below or above my second target is a bonus. So I need to consider this as a bonus, nothing more. And it allows me to get free from all those emotional reactions and all that pressure. Oh, it goes down, it goes up. So I don't care. I set my dynamic stop. If the market decides to print a new high or to retest the previous structure highs, I will let the market do that. So I just don't care about that. And that's it. So this is my fast approach. Obviously, we need to, for those who are starting to learn, I believe there are a lot of things to clarify before starting to trade any other strategies. So,
well, you know, one of the things, and thanks for the explanation, Andre. One of the things that I think that that is a takeaway from what you're saying is on your initial profit is that you look to take profit as a 38% retracement.
Always.
And that's a very good discipline, and it's something funny that I've never personally read from any books, but when always asked, when there's a Gartley pattern or a butterfly pattern, which those tend to be the most common for me to trade, of a harmonic pattern. Those are always my first targets, and usually all I'm looking for is about a 38% retracement. Anything after that for me is gravy.
Yeah, and if you look left to the previous structure, usually when those patterns complete, usually the 38% retracement is synced with the previous structure support or resistance. No.
Yes.
So above those levels, usually the market tends to trend a little bit higher. So or behind those levels. So above the 61.8. And that's why I trail the position above the second target. But yes, my primary target is the 38% retracement. Is where I start to cut my position or to partition my positions, and it's where I want a risk-free trade. So I adjust my stop loss at break even, and I let the trade go and roll. So that's the way I take advantage. Eventually, engagements in a 2 hours time frame advanced pattern, it becomes into a weekly mega and monster trade. So and that's the way I take advantage inside the market, trading those advanced patterns. Try to engage them on potential reversal zones for higher time frames, and then decrease your time frame and search for those advanced patterns in order to engage the market in the direction you have projected in a macro perspective. If I believe you understand that. So yeah, it's kind of discipline. Actually, it's only that. So people need discipline, need criteria, need rules, and for those who are trying to abandon their jobs because they hate their boss, the worst boss that you will have inside the market is yourself. So
true, that's true.
You need to be super, hyper, mega disciplined in order to trade the market. So if you are not disciplined, eventually you will survive for a few months, and a few months later you are not here. So I believe it's crucial to create those disciplines and those rules, and above all to respect them. So it worth nothing to create variables and to respect them in technical approach, and then when you jump and when you need to trigger your positions, you are not respecting your criteria and variables. I know a lot of people, as you said previously, I know a lot of decent analysts, but when they need to trigger the positions, they commit a lot of mistakes.
Yep.
And it's not easy to stay disciplined at 100% of our trades.
No,
it's crucial to survive.
It is, and it's like there's very few, and what I've come across over the years, and this is been rather interesting. There's very few people that are really good at analyzing, and are also equally trading, because typically the analysts, they don't have that discipline that you need for entries, and that's something that I, as a trader, that I've constantly worked on throughout my entire career. And if you think, being in the market for 20 plus years, you should have perfected that. It's not the case. It's always something that you have to be diligent and working on, because what happens, and it's a natural human behavior, is that you may be good at finding entries and entering the market, but then the human emotion will get in your way, and you become egotistical or fearful or greedy or whatever the case may be, and then your entries start to get skewed. That's why I constantly have to take a step back. I have to take a step back and reevaluate what I'm doing constantly. It's not something that is ever I fixed it and I'm done and I move forward as a trader. It's something that I will always work on as a trader is entries, and that's one, and that's like one of the things that I said to the guys and gals in the chat room today is, hey, listen, I've done really well over the last couple of days, and I'm going to, trade pretty light. I don't think I'm going to do much. And the reason why is because I know that if I'm out in the markets today, I'm going to screw up my entries a little bit because of my feelings of fearlessness. Because
you are feeling the cycle, no? Like I believe we all have our cycle on trading. So I have detected mine already. I have cycles of good trades and bad trades. So I'm perfect aware when I'm wrong inside the market. So when I stay away for a while, so I just need to stay away for a while. 1-2 days is enough to 1 or 2 day sessions is enough to clear your mind and get back later. So but it's another criteria, it's another rule, and people don't have rules. People actually are here to make money faster than before, than ever. So obviously it's not a generic approach. I believe we have inside our chat room amazing and very disciplined traders. So it's not a generic opinion, but there are a lot of people that like discipline inside this industry, for sure. Even those we think they are the greatest and great gurus sometimes commit mistakes, and we all commit mistakes, but it's about a routine process. And sorry, Dale. Yes.
Yeah, fame and competency do not always equate. The most famous traders aren't always the best just because they have a reputation. Sure. They could be great promoters. And I was going to say to Blake, what a great hire that besides Andre being a great tactician and everything, he's also a natural teacher. So great presentation, man.
Yeah, really great stuff. And
crucial for me to I'm sorry, Blake. It's crucial for me. It's crucial for me to cross information, not only to share, but to cross in order to check other people's information and to share the best information possible. And I believe for those who are learning and for those who are starting to trade the markets, I believe I don't want to use a mentor or I don't need a mentor guy to guide me, but only you need a valid source of information. So and it's very difficult inside the internet to search for those valid and useful information. So but it was crucial for me when I started to learn process. It was crucial for me to share and to try to educate other people too. So actually it makes part of my other project, my personal project, to educate people, not only to provide them with opportunities to trade, because opportunities you can get them on a daily basis for free inside the market. So you can trade for free inside the markets. You don't need to subscribe our services, and you don't need to subscribe any other services to trade. But if you need discipline, and if you need to learn process, and if you need guidance somehow, some type of guidance during that process, and I believe it's essential and crucial, you need support from those sources. So, and you need to validate those sources as valid points of information. So, and you need to filter that information somehow. The information that I'm sharing with you, it will not be useful for some people personalities. So eventually other people will find more useful, and they will filter that information too. So, but it was crucial for me to try to share my point of views, because it allows me to keep disciplined also. So sharing information is not only to share and also to educate other people. It allows us to keep disciplined and very, very strict in our mindset. So
people ask why I do this, and I tell people I do it because it keeps me straight. It keeps me
completely.
It keeps me. I know I'm delivering information to a large group of traders who are listening in, and I want to make sure I'm delivering the best information possible. Right, which in turn makes me a better trader, because then I adhere to what I'm talking about, and I do much more thorough analysis. So it's kind of a win-win, and I think that's exactly what you're saying.
Yeah, and that's why I embraced your project with amazed, because I was not expecting, that may be true, I was not expecting the ForexAnalytix to contact me in this direction, but it's an honor for me to be part of this project, because you all have amazing work inside, and well, I'm amazed with your project, and it's an honor for me to belong to this team. It's amazing. Well, also.
We're proud to have you as part of it. So with that being said, I'm going to turn it back over to Dale. Andre, thanks for spending the time here. I've got to get back to my Friday trading day. Thank you so much, Dale. I'm going to pass it over to you.
And have a nice week, Blake.
You too.
Thank you so much, Andre, and always feel free to drop in anytime you see something you want to share. Just jump in. I'll pass you the ball.
It will be a pleasure.
And really glad that I brought you in to be interviewed, and they recognized your name when they were going through TradingView, even though I had forgotten.
So no problem.
I'm going to be 65. I forget, where I live sometimes. So anyway, I get lost in my own nation.
You have smartphones now. You can close your house door.
What room am I in right now? Anyway, guys, listen. Someone wants to know your handle in TradingView. Do you use your Twitter handle?
It's the same. It's trading_jazz, and if you change into the UK version on TradingView, you can search as a top author, all-time top author inside the TradingView. I'm ranking as the first one there. I believe I can show you. I don't know if you are seeing my screen or not.
Yeah, they still are. Yeah.
Okay, I can show you just this very fast. You can find me on, actually you can find me on ForexAnalytix.com. It's the easiest way to find me. So you just go there and subscribe $1 for the next 10 days trial, and for sure you will not get out once you get in. So, but this is my public profile on TradingView. It's trading_jazz. But if you are in the main page on TradingView, you just need to change the version for the UK version. I believe it's the easiest way to find me. My browser.
Why the handle Trading Jazz? Is that your favorite?
I don't know though, because yes, I love jazz. I love trading, and once I created this profile, it was just for fun. But well, yeah, it is what it is. Nothing in particular. But in UK.tradingview.com, you can change for, if I'm not in the front page, you can change for top authors of all time, and I'm right above Akhil Stokes and Gray Stone, also both great people. But I'm ranking above those people there, and you can click and jump inside my public profile there. And obviously, and again, join ForexAnalytix.com, because it's a must, you know. So it's all for today, Dale. No.
Okay. Thank you, Andre.
Okay.
Have a great weekend, my trading warrior brother.
You too. Thank you very much. It's a pleasure.
The same goes to all of the PACE members. Next week, at the end of the week, will be our 1-year anniversary. I hope that our mission of building up and edifying traders has been accomplished, and many of you over the last 12 months. Have a great weekend, and above all, don't just count your pips, count your blessings. Remember, trading is what we do. It's not totally who we are, and time is gone forever, so make it count. And looking forward to a great spring trading season with all of you. And as I said, on the weekends, the best time to get familiar with our platform and navigate around. You could do that, but with $1. So for that, you're welcome, Ed. You're welcome, Kurt. You too, Alina. Okay, Kareem. Okay, everyone. Good hunting the rest of the day. Do your homework on the kitchen table. Bring your laptop or tablet and get ready for next week. I think we're going to have a real interesting period ahead of us going into April. Good hunting. Adios. And thank you, team. Go, team, go.
Thank you.
The best team on the net. The best team on the net.
For sure. No doubt.
You know, find a better webinar. If you find a better webinar, even if you paid a premium price, you can find a better webinar. So thank you for your support, and thousands agree with me. I'll see you on Monday. Adios.